Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on euro currency. So here mostly, market just completed the scenario that we have discussed recently. So you can see action down has continued. Market has touched the predefined strong support area where we said, so we will get the bullish stretch pattern. It means that in the current moment we do not consider taking new shorts, because stretch suggests the pullback out from this support until the overbought oversold range will not be normalized. In other words, when the market will just stand somewhere near the zero area of the trended oscillator, so between the bands of the overbought and oversold. So here I do not have it. So okay, let's show you the overbought as well, just briefly. So here we have the overbought oversold. This is dynamic parameter. So if even market will stands flat, these lines will keep going lower. So it sometimes happens that it's a tricky moment of the stretch that it could achieve target if even market will not move in opposite direction, but just stands flat for some time, because this reaction on the overbought and oversold area, and this is not linear dependence of the price and these bands. So in other words, something of this kind could happen. So take a look, here it was oversold. Market just stands somewhere in the range, but right there it appears in the middle of the bands. So from that standpoint, the stretch target will be completed. So, but anyway, currently for us, the major conclusion that we could make from the daily chart is that we do not consider taking new short position by far. We need to see some pullback. At the same time, we have two interesting moments. They are mostly contradictory. Personally, I suggest that a bearish scenario has more chances to happen, but at the same time, we can't ignore some interesting combination of the extensions. So first of all, take a look what we have with the retracement. So it's 127 of this one. It was the butterflies. If you remember, we traded it to the upside. Now, if we suggest that market starts our projection right from here, you could see that the combination of the 127 of this second drive and the first agrees in the same point, which is very difficult for the three drive pattern. So one of the scenarios suggests that might be our projection right here, so it can be some kind of the free drive pattern. That's just because of the combination of the levels. I do not want to say that the bullish scenario right now is more reliable and it has more chance to happen. I think even an opposite, that the bearish scenario seems more probable, mostly because a reaction on the COP and just minor extension too overextended to the downside, especially when you see this acceleration on the CD leg, the strong downward drop right back down to the oversold, breaking all supports on lower time frame. This is not normal for the bullish market. From that standpoint, despite that we have this combination, it seems that, at least by my opinion, with all other stuff stands equal, chances that after pullback market will show another downward action, well, stands relatively significant. And take a look, we also have bearish divergence. Divergence itself, by itself, suggests even the taking out of the C point. So, as you understand, this will be a tricky moment. Maybe we will not use this, can't use these extensions, but just for information, that you do not forget about it, that we have it. And if situation will change, market starts climbing higher, don't forget about the area around 112, which might be very important. On lower time frame, we have few setups to consider. First of all, on the fall time frame chart, as you can see, as we suggest, market dropped to this level. Returning back to the idea of the stretch, we have downside thrust, and here's we got a pullback, and potentially this thrust is suitable for Jordan directional patterns. So in the current situation, it seems that bread and butter more logical, but theoretically double repo pattern also could be formed and a bit deeper retracement might also happen. Maybe market will retest the same previous stops and somewhere around the 50% resistance of the whole downward action. This also is possible. So just keep watching what the particular pattern will be formed here. Based on the hourly chart, we have ability to see maybe some kind of the head and shoulders. The first level where bread and butter could start stands around 109.85, 109.83. This is confidence area, and this is the 30% resistance in the whole downward action. So potentially it is suitable for the bread and butter, and this is first level where it theoretically might be formed. But first we have to get this some kind of reversal pattern and ABCD performance to the upside to get market around the levels. Bullish divergence here is on hourly chart as well. It suggests that, well, since it appeared that the strong daily confluence, it is more or less reliable, and as you know, classical target of the divergence is a top between the valleys, so it should move above this area at some point. From that standpoint, theoretically we should maybe get this kind of the pattern later, but let's now run ahead of train, just see what will happen, what patterns will be formed, and as soon as we will get it, we could make more or less reasonable decision on what position should be taken, at what point it should be taken, what potential targets might be. But the first look, it seems that here as we will be watching for the hand shoulders, potentially entry will be around 109.40 as usual. So right arm bottom, and with this ABCD pattern, seems this will be the potentially bread and butter around either this level or 50% resistance level around 110, 110.15, somewhere in this area. That's briefly what theoretically might happen based on the current performance. But let's see, and then make the reasonable decision.